When I did the research, I realized actually that there was no one specializing in the asset class at all.
12 years in the game, you're now director and principal of your firm. What's been happening in the medical space right now? How does that compare to, let's call it 2 years ago or a year ago?
The workforce struggle for getting GPs into regional centres is very hard.
The suburbs in which you may live in, you have to invest very differently to the suburbs you may invest in from a commercial sense.
That is the struggle about regional healthcare, because without the workforce, you cannot set up. Investors also need to keep into mind there's healthcare and then there's quasi-health. A lot of properties are getting branded as healthcare, and this is the whole wellness, sponge pool, cold plunges. That is not really healthcare.
Welcome back to another episode of the Commercial Property Investing Show. And I've got Chris and Franz here with me today. Franz, welcome to the show.
Thank you.
Welcome, mate.
Thanks for having me.
Mate,
Very exciting.
all the way from Brisbane.
Bris Vegas.
There you go, Bris Vegas. Well, for those tuning in for the first time, Franz is here from RWC Medical, which is the Ray White Commercial and Medical. And what that does is really focus in on the assets that are in the healthcare industry, and particular Brisbane being a specialized market that you know quite well, but you've been doing things all over the country with things that are coming your way. But mate, I mean, I want to talk to people listening in. Obviously, they have done commercial deals with us or intrigued by commercial deals, and they know this medical is somewhat the gold standard in their eyes of commercial investing. So let's start off with what pulled you into the medical space in particular and what keeps you there.
Yeah, so I actually got an opportunity, I think about 12 years ago, to work on a healthcare asset, and I thought I'll take it on with two arms and educate myself about property and healthcare businesses itself. And when I did the research, I realized actually that there was no one specializing in the asset class at all. So I thought I'd take it upon myself to diversify myself against everyone else in the industry and start specializing just in healthcare.
Yeah, awesome, mate. So you 12 years in the game, you're now director and principal of your firm. You've obviously got a significant experience and exposure in the medical field, and it's such a niche asset class too, isn't it? What's been happening in the medical space right now, and how does that compare to, let's call it 2 years ago or a year ago?
We're definitely seeing the market responding to, after COVID, the medical asset class, because everyone is comparing it a lot to childcare, and they're saying long-term leases, stability around the tenant. And there's been definitely an increase in demand just right through from investors wanting to diversify their portfolio into healthcare itself.
So with medical assets, there's pathologies, GPs, physios, even chemists, right? Where are you seeing the flavor of the month in those sort of niche categories?
Let's maybe touch on that. So I think there's a few things that investors also need to keep into mind. There's healthcare and then there's quasi-health, what I'm going to call it. A lot of properties are getting branded as healthcare, and this is the whole wellness, sponge pool, cold plunges.
Yeah.
That is not really healthcare.
Yeah.
When we talk about healthcare assets, especially in the business itself, we're talking about primary, secondary, and tertiary healthcare, and they've broken up into those three sectors. Essentially, when you look at primary healthcare, it's your GPs. It's your first line of contact as a patient, right? You don't go to the chemist first. You usually make the appointment with the GPs. When you go get your bloods done, the GPs refer that to the pathology. Once they give you the scripts, you go to the pharmacy. So if you look at from an asset class, and then we would say, well, are you investing into healthcare? Make sure that the thing that you're looking at is actual healthcare. That's probably the one thing I would say is very important. And then the allied health component is actually complementary services to the GP clinic. So once broken an ankle and you had to go to the doctor and you got the treatment done, you have to have post rehab. And that is going to the physio, re-strengthening those muscles that you tore or whatever it might be. And that's a referral base. So when we look at those sort of asset classes, we definitely see that you want to invest into proper healthcare assets and not large format retail, as what I'm going to say.
Now, when it comes to the different healthcare assets that you've been looking at and you've looked after, we've also worked with in the past, which is where this, relationship formed from as well. And we noticed even in some of your many deals following that, there's been a lot of large multi-tenanted deals, right? Could you talk about the rise of this over the last sort of, half a decade to a decade, where a lot more is being just these super centers of almost the world of medical and what that means for that sort of world moving forward?
Yeah, it's something that's really been a positive move in the healthcare space and the healthcare sector and just in general. If you go back 12 years ago when I started, you used to have the GP clinic in a separate building, and then you had the radiology clinic in another building and a pathology maybe somewhere else. What has changed over the last 10 years is all those services are integrated into an integrated facility, which a lot of them are calling now health precincts, medical centers, medical hubs. And it does change how healthcare is provided to the patients. And I think it's also better quality as well, because if you think about a patient journey, when the patient goes to the GP and they don't have to jump in their car to drive somewhere else, you actually get this flow where they see the GP, they see the radiology, they go back to the GP in the same building and then get referred to upstairs where the specialist is. When it comes to like providing quality healthcare, that is efficient. It provides better economic scale, I guess. And that patient only has to book one day to get all their services done versus having to take off work multiple times to go to, a different clinic, 2 days later. So I think that the integrated healthcare precincts have really, started developing everywhere in Queensland. We're seeing it in Melbourne. We're seeing it especially Sydney. And they are getting bigger and bigger. We started at 2,000 square meters, 5-10 years ago. Now, they 4,000, 6,000, even 8,000 square meters. We're definitely following sort of the international standard as well. If you went to KL or you went to America, those facilities are massive. They have private hospital, they have day hospitals, they have the primary, the secondary, and the tertiary all into one building. And it is for efficiency. It really does give a patient a better quality.
Yeah, convenience is king, right?
Yeah.
Like, we love Uber. We
Yeah.
love Uber Eats.
Press the lift button, you go up to your different center, come down, you're there. Totally know what you mean.
Yeah.
In commercial property, there's different value drivers for different asset classes. For instance, in industrial, major roads, proximity to ports, airports, CBD, arterial roads. But for medical assets, Franz, want to pick your brain on what drives value for medical assets. Is it proximity to hospitals? What's the...
It's an interesting one. It also depends on the healthcare because there's multiple layers. It also depends on like what layer we're talking about. If you look at primary healthcare, it is really driven about two things: location, demograph. Private health, as a third point, actually. Those three things is a mixture. Now, I'll use an example. Where we do see some places struggle, or like they struggle to get traction, even in the best areas. For instance, Hamilton, right? Brisbane City, Hamilton, so close to the airport, so close to the CBD. The thing about it is everyone is healthy in Hamilton. They all are fit, they working class, they go for their run, they eat their avocado and, toasty in the morning, and they actually don't have many health problems. And you move out slightly and you get a balanced demographic where you do have, a mixture between private health and also a higher household income, for instance. That really is a sweet spot for medical centers because you still get the people getting sick. People have, or the demographic that gets sick. You get the over 55s that are, getting older and needing to see the doctors more. And that aging demographic is also where the demand is growing for as well. But you really want to have a balance. So primary, I think it's very key to look at the demographic, the location, and the private health. For hospitals, right, if you're a specialist, you want to be as close to the hospitals as possible. As a specialist, I do not want to drive somewhere and then be a half an hour from where I'm going to do my procedure. So I really want to be location driven around where those hospitals are and the infrastructure around those hospitals. And then for post-surgery, you also want to be close to the medical centers and you want to be close to the hospitals, because once you get an operation, you have to go somewhere to get the rehab done. So they all work intertwined, but if you separate them, it just depends on like if you're looking to invest or you're looking to set up for the first time, where do you go? And that's the demographic that we do for them.
Gotcha. So higher income, numbers based around seniors, like population of seniors, a high population of seniors, 65 plus. You want to see those demographics, right? Higher income and higher like prevalence of older people,
Yes.
Because they're going to be sick more often than not, right?
Yeah.
And obviously, proximity to hospitals and GPs and such.
Loving the show and keen to invest? Well, book your free discovery call and we'll actually walk you through how to build a high growth portfolio without all the guesswork. Just jump onto the link in the show notes or visit investorkit.com.au to book your discovery call. And now let's get back into the show.
What are your thoughts then on regional, like major regional places for medical investments? Because because there's a lot more old people out that way.
Regional is an interesting space at the moment for healthcare. And the reason for this is the workforce struggle for getting GPs into regional centers is very hard. I mean, the government is trying to do everything they can to
the huge packages as well. They're trying to offer like double the pay sometimes.
Yes. Yeah. But the thing is, I think there's two critical issues around the regional. You've got government policies, and then you've got APRA that also has their own policies, and the two don't talk to each other. And when I say that is, if you look at what regional is at the moment, right, an area of need for doctors. So if I'm an international doctor coming in, I have all these locations I can go to depending on which pathway I come in. Maroochydore is a area of need at the moment. But then you look at Bundaberg and you look at Ipswich and you look at all these other regions that really does have a struggle to get more doctors, but they're not area of need. So there's a bit of a discrepancy around, or there's a lack of communication, I think, with regional centers, like what is determined then as regional and what is not. And I think that is the struggle about regional healthcare, because without the workforce, you cannot set up, and you cannot. It's very hard to replace the tenant if the tenant were to move in 5 years' time or 10 years' time. So you have to be very careful of investing in regional for that reason until the workforce area gets sorted, or it's an up and coming suburb where there is a lot more population coming. You need to be careful about where you then buy.
Yeah, looking at it from all that holistic sense rather than just because, hey, here's a good deal on paper. You need to look at it holistically for the city. But mate, I want to take you from the other side, meaning we're not going to talk from Franz on the selling and leasing and managing assets as a team. We're going to come to the other side of the investors world.
Yes.
And when you're in the investors world, if you're giving them tips of the red flags or the common mistakes you see investors make when investing in healthcare, what would you warn them about today?
I think this is one of the most easiest asset classes to actually get early red flags. And the way you can do it is a medical center, they do two things. One is on a website, they'll publish every single doctor, so you can know exactly who works there. But two, you can actually go to the booking system. If you want to book as a patient, you can go in there, you can have a look at how many bookings are available. It's one of the only sectors that you can actually get that data in real time. So from an investor's point of view, if I looked at it and said, all right, what's the early red flags? Look at the medical center, have a look at how many doctors are in the practice. How far are they booked out for? If a GP clinic is 2 to 3 GPs, 99% of the time they're not profitable because the overheads are quite hectic in a GP clinic. But you can actually see how far they booked out for. If they booked out for 2 days in advance, 3 days in advance, you know they've got a dedicated patient base and they're pretty busy. And that is usually the driver then for the referrals as well. So if you're looking at the patient load that's coming through, you can then go and say, okay, well, they're actually also generating referrals. So that means that the businesses around them are also thriving. And that's the only sector that I know of in real estate where you can't get live data about how Woolies and Coles are doing, but you can actually see how GPs are going.
That's true.
Yeah.
So that's two sides of the coin, right? You can see how well or bad tenants performing or operators performing. Are there any other red flags that you lift up the bonnet and you can see as well, or
rent is the big one. There is very much a headline of where medical center can pay rent, and if rents are above market, I would 100% look at that first. The third flag that I always look at is the pathology. Who has the rights to the pathology? Is it the landlord? Is it the GP? I would say probably the lifeline for a GP clinic is really that pathology. If the pathology is subleased to the doctor, or the doctor is subleasing the pathology to a QML or SMP, they've got a really good stability around at least getting that income from the pathology, and they drive that referral basis as well. But when you separate the pathology out and you've got rents that are higher than market, And when it comes to the renewals, you try and hike it up further. The medical centers can't sustain that for long term. And that's where we see, I'd probably say 60-70% of investors go wrong. They're buying over-rented medical centers. And if you look at their rentals in 5 years' time or 10 years' time, it's unaffordable. Like, the growth is just not that much. And that's where we see
that's where the rose-colored glasses from investors, because they look at medical, they look at all these beautiful tenancy names, they look at these, I was so-and-so came over to my house, they're a doctor, and they think, oh, they're rich. They came with the Mercedes, they came with the BMW, right? The nice European cars, the German cars, right? And so they felt good. But then all of a sudden, paper shows these over-rented the deals in that way. Now, for those who may not know you and are getting to learn about what you do in the space, could you tell us about two things? One is the types of deals in this world you look after, meaning deal sizes, types of medical deals in particular. And then second, we talk about a particular deal where you can just show us how this medical market is moving, like a deal example.
We actually have a range of asset range that we deal with. Everything from consulting suites that we sell to specialists in hospitals, all the way through to large precincts with mental health hospitals, day hospitals, and radiology clinics. So about 2 weeks ago, we sold the iMed in 1808 Logan Road, which you'll know very well.
Right. We bought there as well.
Yeah, and as a good result, iMed invested a couple of million into the fit out there and the equipment that's in there. The result for that, we ended up getting it away for, I think, 5.78% yield on a strata.
Wow.
And there's a few drivers for that. One was the amount of money they've spent in the fit out. There's one of the largest GP clinics. There's about, I think, 10 to 12 doctors next door to them as well. So they're pushing that referral. So all the key drivers, main road, location, everything was just going for it. And we got a record there. But then we also gone up all the way through to a deal that we did, I think last year, November, where we sold 20 Nelly Street under to Real Asset Management. Yeah. They funded the management group, and I think they 51.5 million where they purchased it. And there was a unique sort of working together with them on changing that into a mental health hospital. It was a spec build from the previous client. And we were able to get, I think, 64 beds in there from a mental health. We had radiology in there. There's dental. There's healthcare providers that sort of complement that services as well. So the size of the investments are getting bigger. There's this, we did Springwood Health Hub, which is now owned by Centuria as well. We sold that to them, I think it was 2023, roughly. That was 32.5 million. And that's a project that we worked from ground, literally greenfield side. It was a piece of paper on a napkin, drew it up, and we went all the way through to delivery phase and selling it to the fund as well. So those are probably the big key deals. But we've also done GP clinics, 26 Torres Crescent, North Lakes, 5.9% yield, 10 million. And there's been actually heaps, and we got a lot coming up as well.
Yeah, I mean, on these deals, Franz, what's really good learning for everyone listening in is that, firstly, there's these suburbs that don't have the $30-40 million residential properties.
Yes.
Right, but they can very much carry through the community, the demographic, the population, the demand for this one really centered health business to sell at that 50 million.
Correct.
Right, to sell at that 40-50 million. So it's just lesson for everyone learning that the suburbs in which you may live in, you have to invest very differently to the suburbs you may invest in from a commercial sense.
Definitely.
Right? Now, when it comes to this side of the table that you're on, you've worked with us on deals in the past, and you've also worked with many buyers that don't get represented. And so what have you seen buyers go wrong with when you see them not professionally represented and they're looking to do deals with you, and you've seen them not kind of look after themselves as well as they could? What are some examples you've seen in your time?
We've seen assets get bought, they over-rented, and they had maybe 2.5-year whale on them or 2-year whale on them. 12 months later, someone will reach out, or the investor will reach out, and they'll go, my tenant is leaving. And they thought that everything was in place. It was a fit out was in there, the medical center was running. And they've been sold a lie, really, that they've never done the due diligence around the tenant itself, how well it was trading, or what even the future plans were. How old's the fit out? When you're buying an asset that has got a 15-year old fit out in it, the chances are the tenant's not probably going to stay there for much longer either. So these are all like key things that can be missed through not having someone that knows about the sector or being represented correctly in the first place. Yeah.
So how do buyers go about actually getting that information to avoid those mistakes?
I would really say, some of those key things we spoke about is looking at the books, reaching out to, RWC Medical as well. We do this for buyers all the time, and we help them through that journey and give them the key drivers of why we think this is a good investment. You could honestly reach out to other real estate agents to just see what the market rents should be. Just key things that without having to speak to the tenant, just make sure that the rental is actually on market. Get the leases reviewed by a lawyer. I mean, that is the amount of times we recently actually got a client that we took on management for, and we went through the lease, and honestly, what was agreed in that lease, they could forfeit paying rent at any point. Wow. And you go, how?
All of this is get the right team around you. Yes. Get the right team. Whether you're selling and managing and leasing, whether you're buying, whether you've got the right legal expertise, get the right team around you. And we've seen it in all the commercial deals we do. Like, we operate at such different dollar values to the typical residential investor. And when we see these different dollar values, you think that the audience gets smarter and smarter as it goes up. It's not like that. No. It's like they're more willing and risk conscious. Their ability to take on bigger deals, they do that. But they still rely on teams around them. They still get that guidance around them. So, Franz, mate, today's been a really good eye-opener on the medical world and just trying to understand that. We'll definitely have you back in again to talk about more and more deal examples in the future. But when it comes to vendors who might own these medical assets or healthcare assets across the world of Brisbane and Queensland, how can people get in touch with you?
Yeah, so our website, RWC Medical, QLD.com. .com. Also, we've got our Instagram page as well, and LinkedIn. You can look at us and follow us there as well. RWC Medical on LinkedIn. On the website, we've got a little form. If you want to message us and ask us any questions, you're more than welcome to.
Fantastic.
And thank you very much.
Thank you so much on behalf of Chris and I. We've enjoyed working with you in the past as well on some deals, and looking forward to more collaboration together. But at the same time, thank you so much for your time today, sharing more about the world of RWC Medical and things to look out for and how to get the right stuff.
Oh, awesome.
Cheers.
Thank you very much.
Thank you so much, Franz.
Awesome.